AutoNation continues to see big profits as consumers buy newer used cars during the pandemic at ever higher prices. The company clobbered Wall Street sales and profit forecast this morning and said it remains an aggressive buyer of its stock. Joining us now is AutoNation CEO Mike Jackson. Mike, always good to see you. So in the earnings release, you say these trends will continue into 2022. Why are you so confident?
Well, we really felt, and we discussed it a year ago, a seismic shift in the American psyche with the arrival of this god-awful pandemic and this unimaginable shelter in place. And it really changed priorities for the American household. They wanted more space. They want more electronics in their home, and they want personal transportation. They want to control where they go, when they go, how they go, who goes with them. And the demand for personal vehicles increased dramatically. And I think this pandemic was a scarring event and has permanently increased the demand for personal vehicles. And then if you look at AutoNation, we have this unique combination of a brand that goes coast to coast, a great customer experience, a digital platform, and this led to us achieving record revenue of $7 billion with a 50% increase in new vehicle sales, a 65% increase in revenue on used vehicles, leading to just a remarkable performance in the quarter.
Mike, I was driving by my local dealerships in New York, and there's no inventory. There's really nothing on the lots. It was kind of strange, a little bit apocalyptic. When will dealer inventory get back to some form of normal?
So you're referring to new vehicle inventory, and we reacted very early a year ago and said, oh, there's going to be shortages here on the new side, and we went out and aggressively purchased pre-owned and really run that entire market. And that's why you see our just remarkable performance of a 65% increase in pre-owned. Now, there is this further disruption after the heroic effort to restart the global supply chain of a shortage of chips for the production of new vehicles. Now, I should be clear here. The industry has produced 100% more vehicles in the second quarter of this year versus a year ago, and they're only 6% off what shipments were in 2019. So we've come a long way, but these chip shortages will persist through the rest of the year into next year. And with the level of where demand is, there will be shortages. Now, the industry has done a very smart thing, and I really have to praise the manufacturers. They've prioritized what they're producing to align as close as possible to what people want to buy. I know that's a revolutionary concept, build what people want to buy, but that's not always been the case in a production-driven automobile industry. Then we have offered our consumers great visibility on what's going to be produced, and a tremendous percent of the pipeline of what's incoming is already aligned with consumer preferences and is sold. And out of this, I think there's a very healthy discussion within the industry whether we want to go back to the old push system of overproducing and very high inventories, or whether there's a new way that is better for the industry and better for the consumer. So out of this awful pandemic, maybe some good things will come.
Mike, it's Miles here. I'm hoping you can help us settle a debate that we've seen in recent data. CPI tells us used car prices were up 10% month over month into June. The Manheim Index says that the prices month over month from May into June were actually down a little bit. What have you guys seen in terms of pricing on the used car side?
On the pre-owned side, there's no question that values are up. But you have to be careful that, of course, you're comparing in the second quarter of last year to the shutdown, and pre-owned values were declining, and rental fleets were liquidating. So you have to be careful. If I compare it all the way back to 2019, yes, there's some increase. So in principle, if you work all through that and some of the special things in the labor situation, I think a lot of these inflation numbers are indeed transitory. With this, I agree with the Federal Reserve, and are not as extreme as the headline numbers that are occurring right at the moment. But overall, pre-owned values are good. The consumers are pretty smart and sophisticated. They see that. They view things as a difference between what they get for their vehicle and what they pay for what they want to have. And they like that. So it's actually supportive of demand at the moment. And you combine that with very attractive interest rates and this seismic shift towards personal transportation. And we have excellent demand for personal vehicles well into next year and beyond.
Hey, Mike, it's Julie here. I just bought a pre-owned vehicle. I like to think I got a decent deal, but as we've been talking about, the numbers don't necessarily reflect that, the overall numbers. When do you think, in general, we'll start to see pricing come down, both on new and on pre-owned?
So the demand relative to the production of new vehicles is no question, it's an extreme situation. That demand has gone up dramatically, as we already discussed, and the industry has this chip shortage, which has disrupted production. Now, this chip shortage and its impact on production will continue into 22. Now, I don't think the goal of the industry is ever to go back to overproduction, so I think there'll be lessons learned. Overall, we have a lot of confidence in the future. You see that in our share repurchase, buying our own company is the way I think about it. We bought 9% of our outstanding shares in the second quarter, 15% of our outstanding shares year to date. So this demand versus supply, I think continues well into next year and beyond. But let's just talk about next year for now.
Mike, you mentioned the stock buyback plan. I mean, you've been one of the most aggressive buyers of stock out there that I have seen. 15% of your outstanding shares year to date for a total of $1.2 billion. It's almost as if you're taking the company private. Why have you been so aggressive here?
So listen, I've been here at AutoNation coming up on 22 years. And I think I arrived with outstanding shares of 525 million. And now we're down in the low 70s. Now, here's the key on share repurchase. If you have a strong balance sheet and we're investment grade and you feel you can buy your stock at a very attractive price because of special circumstances versus where it's valued, buy it aggressively. And I've done that very successfully over 22 years. So I'm optimistic about the future, and it's not just me sitting here saying that. I express it with share repurchase. When Mike's really optimistic and things look good, I buy shares.
Well, and you seem optimistic, and you've certainly put your money where your mouth is. AutoNation CEO Mike Jackson.
There you go. That's exactly what I said.
Always learn a lot. Stay safe. We'll talk to you soon.